This time period is pretty much guaranteed, and in some places ETFs will be built on any asset that becomes a trillion-dollar liquid asset. I mean, I do think there is a risk, but I think it's overblown because I think Bitcoin is already very well built. There is a ceiling on the size of blocks for a reason, and I think that the market will take its course. I think you have a good idea of what Bitcoin is. It is the most secure and decentralized database we've ever made. Lyn Alden is a well-known author and respected economic analyst who focuses on Bitcoin. Of Broken Money talks about how important Bitcoin ETFs are for making the cryptocurrency more accessible to both large and small buyers. As a partner at Ego Death Capital, Alden knows a lot about how the financial markets work and how Bitcoin is changing its place in them. According to Lyn Alden, Bitcoin can't get any better at this point in time. Any asset that can be bought and sold for $1 trillion will draw ETFs in many countries, including the US. Bitcoin's price might be about to go through another big jump, this time caused by new changes in the cryptocurrency market. Reports say that the world's biggest futures market, CME Group, is getting ready to add Bitcoin trading to its platform. Ready to find out more? This is in line with recent macroeconomic trends. This time period is pretty much inevitable, and any object that becomes and product worth $1 trillion that is easy to sell will be used to build ETFs in some places. We have some split of powers here in the US, so even though the SEC didn't want this, they lost in court. Now that people want it, more people can get to it. There are pools of cash, like retirement plans and managed assets, that many of them haven't been able to get to, and they can't now. Because of imbalances, the fact that they could only access it in grayscale has been a problem. But now there's this big release valve that lets a lot of capital finally get out of that big trap and go to other places that are better managed or cheaper, among other things. That's why I think that process will happen. I believe that worries about centralization are a bit exaggerated. They should be talked about, but I think there was already a big chunk of Bitcoin that was in black. It's now going to BlackRock, Fidelity, and a few others. In those places, the general pie is growing at a moderate rate. A lot of people in those situations would rather do that, but I think it's important to make self-custody pretty easy for people so they know the risks. But I think it's just that people have more choices now. Many people wanted Bitcoin but couldn't get it. Now they have more choices, or they have money with an ARIA, and that person can't or won't put some of that money into Bitcoin. Now that they can, I think that's what will happen in the end. It's going to happen anyway, whether it's good or bad. People aren't saying that Bitcoin has strayed from its purpose just because there are now ETFs for it. It's like saying Bitcoin didn't make the ETFs. It updated its APIs to let Bitcoin work with this way, which is basically what it did when it made ETFs for Bitcoin. ETFs are a way to get into different types of assets. They chose to connect to Bitcoin now, and you should be wary of big centralized honeypots like ETFs and Binance. When a lot of Bitcoin is held by one big company, that's a risk. A lot of them are in Coinbase right now. I don't think that's a good idea, so I think people should be careful with that. If you're going to hold ETFs, you should probably spread them out among different banks. You should take self-custody though, and I think that's a good idea. We'll see how that works out in the long run. But I think that was always going to be a stage that Bitcoin would go through if it was going to become as big as it is now. Even though only a few people use Bitcoin, the fact that its market cap is $1 billion makes a difference. I mean, Bitcoin had an effect as early as when WikiLeaks used it to get funds. So it started to affect people right away on the edges, but on a larger scale, it can change the value of a currency because people in that country now have more choices. That's the big picture. The fact that governments are paying attention to value changes is because they are important when it moves around at the speed and size that it does now. That's why organizations are paying attention to it. It's not just a passing trend. Not just some tech that only seems to work for 5 years before breaking down. It has shown that it can be resilient. And it has also grown to the point where this actually counts for people who aren't tech savvy, like people who are just looking for a pure utilitarian use case. A lot of those people find value in it. Before people can put all their money into Bitcoin, it needs to get over a few major problems. Crypto traders say Bitcoin is going in the same direction it did after the Bitcoin halving event in 2016. One indicator suggests it may be close to its local bottom, and another says it could hit $350,000 at the peak of this cycle. Jack Dorsey's bold claim that Bitcoin can hit $1 million by 2030 has made people very interested in predicting the price of Bitcoin over the next 10 years. Raoul Pal, a British financial expert, recently said that Bitcoin's value would go up a lot, which could mean a steep rise in the summer and fall. Lyn Alden isn't sure what will happen in the next 6 months, but she's optimistic about the long-term price chances of Bitcoin. She talks about how problems like fee increases lead to improvements in scaling solutions. By looking at Bitcoin's history through its response mechanisms, she thinks it's a normal process and is sure that the network will be able to handle problems. Let's look at a movie instead. Okay, price. I have no view in the next 6 months or so. I'm optimistic on price for any multi-year period, and I think I support a member that the quote-unquote like Bitcoin community or Bitcoin Twitter or Bitcoin like this is like kind of Western world Bitcoin users. This is like a piece of the iceberg. This is kind of the part that's visible to us. We're participating in it. There's globally, it's bigger than we realize. And also, I focus a lot on response functions that goes back to my kind of system engineering background and kind of. And I've generally found for example, when I analyze macro systems, whenever things start to tilt a certain direction, people start freaking out, and they don't realize that when it hits a certain point, there's going to be a mechanism. It's going to push back in the other direction, and then when it goes back in the other direction, they freak out about that direction. They think that's how it always is now, and then there's a response function that tends to push it back. And in Bitcoin, when it was in low fees, there were critics saying, look, it's got low fees, it's got a security problem. Bitcoin doesn't work XYZs also. There are a lot of people spamming it with JPEGs and Beam coins, and the fees are pretty high. People don't like the fees. This is broken, and the sky is ending. Like the US Constitution, Bitcoin is valuable because it's hard to change. The Constitution isn't perfect, but the fact that it takes such huge majorities to structurally change it makes it immeasurably valuable, even though it's flawed. Bitcoin is similar to the US Constitution in digital form. It's a protocol with fees and trade-offs, just like any engineered system. There are UX problems. There's all sorts of limitations on it, but the fact that it's really hard, it's not impossible to change, which would also be bad, but the fact that it's really hard to change is important, and it protects us against our own swings and emotion we go back from, this is never going to work, and then, fees are low, now fees are high. This is all broken, in order to scale, like all these scaling things on Bitcoin are really only going to come because of fee dislocations. If it costs 50 cents to send something on chain, there's not a lot of reason to build scaling technology on top of it, because you can speed it up. You can use Lightning if you want a faster thing, but if transfers cost 50 cents, there's just not a lot of it's clear that a lot of economic demand for scaling on the other hand when these spike, either because there's a bull market and a lot of people are kind of pulling into self-custody at the same time and congesting the market, or because people are, temporarily spamming it with the fad that says, okay, well, we don't know when these fee spikes are going to happen in the future. We want to have more optionality in the future to be prepared for these fee spikes. So let's build this solution, or hey, we found out that this tech approach was not working. Let's shift to this tech approach that holds up to this better. And so, yeah, because I analyze things through response mechanisms, I think that this was another inevitable thing that Bitcoin would go through. And it doesn't mean that it's guaranteed to win, but it means it's guaranteed to have had this challenge in the first place. You can't freak out because it's having this challenge. This challenge was inevitable. Now that it's having this challenge, the only thing you can do is be constructive and say, well, what's the